I want today to be an ask me anything kind of day. And then we are going to jump into the Outlier platform. And I'm going to show you exactly how I would be looking to set up trades so that as you go through the next couple of weeks, as the market starts to roll over and you start to put on trades, I want you to know exactly everything that I would do. And I will be trading every day in the afternoon when the market is set up. So be sure you come to watch those live so you don't miss out. And of course, every trade that I put on will be in the Discord as well. So with that being said, let's start on the questions here. Arnand, morning. You got your 14-day trial, 2 days. Go cheers. Started the tutorials last night. I'm having a hard time understanding market breadth. Cool. Let's talk about what market breadth is and why it matters. What is market breadth and why does it matter? So market breadth is essentially how many people are screaming buy and how many people are screaming sell. By the way, I forget who made this. Someone in our Discord, and it was so good. It was so good. This is exactly market breadth, and it's perfectly outlined right here. Perfectly outlined. By the way, 500 buy signals came through today. 500, if you can believe that. Hang on, let me see. Let me see exactly the number. 523 came through today. So that's this enormous spike on breadth, which I'll be honest, has me a little concerned. Has me a little concerned. Now, the reason that I'm concerned is because once this hits over 75, that's when I think we start to reach overbought points. And to see it go from boom to boom that fast, go from 35% to 69% in the span of a couple days, I don't know. That makes me a little bit nervous. So it may be something like this where it pops up, pops back down, and then pops back up again when I actually start getting into the market myself personally. But that doesn't mean that there's not opportunities for you. There's 523 buy signals today. So what is market breadth? Market breadth is this, right? How many people are screaming sell versus how many people are screaming buy? Now, in the S&P 500, there's about 500 stocks. Who would have thought? And in the S&P 500, the more buy signals that come, the more stocks that are bullish is going to push up the market average, right? It's a market cap weighted indice. So when you look at a page like this, the bigger ones are ones that have higher market caps, meaning number of shares times the share price. That's what this means. So there's going to be some like PepsiCo over here, which it's not going to do much in the market if it's down 5%. Then there's going to be some like Nvidia, Microsoft, and Apple. If they're down 5%, the whole market feels it, right? Because look at how much bigger of an impact it will have on the market versus something like PepsiCo. So market breadth is really how many people, not people, how many constituents is the word, but how many stocks within the market are pushing the whole market up together. I like to think of it. I forget where I heard this from, but it makes total sense to me. It's like if the market is the general and all of the individual stocks are the soldiers, and the general's marching north and all the soldiers are marching behind him, that's going to help the general have strength. That's going to allow him to execute his plans. It's going to allow him to go north without any issues. However, once the soldiers start retreating and start going south, right? Maybe you had 500 soldiers to start with, and then a couple start turning around, and then a couple more start turning around, and then you've got a whole stampede of them heading back south, and the general standing alone by himself. What do you think is going to happen? The general will then retreat as well. So the market breadth, it's a collection. It's like a team, right? If you've got 5 people on a team, if you've got Shaq, Kobe, Michael Johnson, not Michael Johnson, Michael Jordan. I don't do sports. Shaq, Kobe, Michael Jordan, LeBron James, and Steph Curry. If you've got all 5 of them on a team, that's going to help win the game. But if you've got Shaq's on the bench, I forgot the other guy, Dennis Rodman's on the I don't know sports. Michael Jordan sitting on the bench and Steph Curry sitting on the bench, and you just have LeBron. Sure, he's going to beat a team of 8th graders, but he's not going to beat a team of professional athletes that are on the other team, right? So hope that makes sense. It's a great question, though. Thank you so much for that. Yeah, it just ask Trump. Trump's going to move the market. Tuck and roll, kids. Daddy's got to get to work. That's right. I can't tell you how blessed I feel that my actual literal day job is trading stocks and being a YouTuber. I am so grateful that I can do this with you, Brian. Could be a gap and crap today if he sits on the toilet. So what is a gap and crap versus a gap and go? So gap and crap is where, let's look at Celsius. Celsius has a perfect example of a gap and crap after their earnings. So what I use as a gap and crap is the low of this gap up. So it gapped up like 30 something percent. And then within 3 days, it was back down. My rule here is if it closes under that low, just get out. It's not going to work. It's not going to work. However, you can look at something like AT&T, which had a gap and go, right? It gapped up and it never once closed below the low of the gap day. And that's a gap and go. So hopefully we can see a lot more of those and a lot less gap and craps. Good to see everybody here this morning. Let me continue on down here. Good morning, Outliers. Chris, have you ever used MACD? I'm liking the idea of combining 1020s and MACD. Have you ever used that as a secondary indicator along with your EMAs? Absolutely. Bro, I've tried every indicator out there. The MACD, the RSI, the stochastics, the Donchian channels, the Bollinger Bands. Dude, I've tried it all. And where I'm trying to go with that is, for me, didn't work for what I wanted. For you, could be perfect. And I always tell you this. I'm not going to tell you what stock to buy. I'm going to tell you to come up with your own plan. And if that works for you and your plan, go for it. Now, what is MACD? MACD means moving average convergence divergence. And you can actually set it up to be 10, 20, 50, or 10 and 20, or 20 and 50, or even 10 and 50, right? You actually get to choose which moving averages. I believe the default is 9 and 26. I don't know why. But it's showing you the spread between the moving averages here. When the spread is really wide, that means it's a MACD, or it's a moving average divergence. When the spreads start closing in like this right here, that's a moving average convergence. And when they cross back down, of course, it's going to cross the other direction. So MACD is just measuring the distance between the moving averages there. I don't know if you knew that. Might help. Albertone, good to see you. Coming at you live, Eric. Another week in cash. This has to be the longest I've ever held cash, thanks to Outlier. Dude, why not hold cash, right? Why not hold cash in a market like this? When the entire world economy rests on one person's iPhone while he's sitting on the toilet, why not hold some cash? But certainly looks like we've got a very bullish bounce right here. Very bullish. And this is what I've been telling you guys on YouTube the last 2 weeks. I think we might have hit a bottom, and it looks like we might be heading back up. I'm not saying we're going to go straight to all-time highs. I'm not saying that. But it could happen, right? If it doesn't, that's okay too. We can make all kinds of money along the way for sure. Graham, the orange ones, dropped his kids off at the pool and now needs an excuse to go back to the way it was. Maybe that nobody knows the few trillion knocked off the market. I don't know. Manny, what's going on? Anybody else watching Backtesting 101? Got some of the nerdiest stuff on the net. Amazing stuff. You got to watch it. Okay, so what Manny's talking about here is over on my YouTube channel. Let's go to that real quick. Over on my YouTube channel, I spent several hours backtesting the other day, and I was like, this is actually decent content. So it's a 4-hour long video. You definitely don't have to sit there for 4 hours, but it's basically me talking to myself and a handful of you guys as I'm going through and backtesting. And in fact, Mahesh has a secret plan to make the signals a little bit less noisy, a little bit more impactful. And I'm actually backtesting a slight tweak to the algorithm this morning. So if you still have access to that link, the backtesting spreadsheet link, which is in the Discord, you'll be able to see my results as I'm plugging in through those. But Mahesh is also going to send me a download of everything. And hopefully at that point, I'll be able to automate what my signals look like. And it's going to be so freaking simple. It's going to be so freaking simple. Also, Mahesh is planning on coming up with a overlay of some sort. He said by next Friday, he should have some information for me. He's not promising it by then, but at least get me some timelines back by next Friday. Where an overlay showing when the master key is active. So then you can look at a chart and within 1.1 seconds say, okay, the master key is not active. I need to be out. Now, what is the master key? What is the master key? The master key is something that I came up with the middle of last year with the help of several of you guys. And it has transformed everything for me. In fact, my results last year, since we discovered the master key, I was up 91% in 49 trades. Right. And it also had me in cash a lot of time. I only traded 6 months from May to 1, 2, 3, 4, 5, 6. Yeah. 6 months from May to December. A lot of time was spent in cash. You can see these sideways moves right here. It was spent in cash when the master key was not set up. And it was crazy. I couldn't believe just how effortless trading felt. So, what does the master key consist of? First, the SPY signal, which flipped to a buy today on Outlier. The SPY has a buy signal today. The market trend, right? With the Outlier trend template, you know it, and I know it. It's the 10 over the 20, price over the 50. We're not there yet, but if we have a couple up days at this point here, it's going to happen really, really soon. But it's still technically a bullish or a bearish trend right now. So don't be FOMOing into anything. Don't be FOMOing into anything. Next is market breadth. Now, we talked a minute ago about how quickly the market breadth just reversed and screamed higher. And that's what you want to see. You want to see that crossover here. But this big move up, it gets very cyclical, ultra cyclical. So I may have to wait a couple extra weeks before I'm ready to get in, because whenever it peaks up like this, I'm still interested in entering trades until it reaches a point where it starts to turn around, like here where it goes from 77, 80, 85, 84.75, and then the next day it's down at 81. That would be the day where I say, I'm done. I'm going to wait until it comes back up. But then also the market breadth on each of the individual sectors. And we talked about why we look at market breadth. It just makes it easy. All the stocks are pushing each other higher, right? It's like everybody has a wheelbarrow and they're pushing the person in front of them, right? All the stocks are pushing each other up higher, and it makes it so much easier. The market should only go up, right? Right? The most dangerous word in finance, spoken by M. Mangine. I think I have a Mangine too. I think I have a Mangine too. Albertone says, based on the principle of risk first, have you ever considered lowering the max capital invested at once to 50% of total portfolio? In the same spirit, would it make sense to add VIX to master key? I don't feel that limiting your capital is a great idea. I don't feel that at all, because how long do I have to sit in cash? And then when the market's ready to say I'm only going to invest half of that cash and the other half is just going to stay in cash, what's the point? Just I don't understand the point of that. I have heard of people doing that, but to me it's like, I've waited long enough. I've got everything set up. It's time to go, and I don't have a reason to not go all the way. Right? You can't be half pregnant. You're either all in or all out. Not like 100% in, but at least looking for those opportunities, right? You can't be half pregnant. You're either pregnant or not. You're either trading or you're not. With the new better 3.0, is there a risk of missing good trades? Oh, dude, there's always that risk. Always that risk. Now, the outlier signals come out at 10:30 p.m. West Coast time, I believe is what it is. And I don't trade until the following day at the end of the day. And that's okay with me. That's just how I set up my trades. For you, if you want to trade the morning, right? You want to trade the open, by all means, go for it. Just do what works for you. For me, that's what I do. That's what I've always done. It's what my mentors do. And I have no stress, right? I'm not looking for, a 5-minute trade or even a 5-hour trade. I'm looking for a trade that I can keep on for several days and ride the trend. So if I get it at the end of the day versus the beginning of the day, that's all right with me. Bull market genius just woke up trying to find out which media catchphrase has the markets up so much today. Yeah, for sure. Corey, I have a subscription to TradingView. I see you use a tool, TrendSpider. Do they offer the exact same features, or do you recommend one or the other? So Mahesh has been on my backside for quite a minute, telling me I need to stop using TrendSpider and start using more Outlier. That's your answer. I actually did create in fact, let me put that on my list of things to do. I did create a TradingView account the other day, because a lot of you guys have those TradingViews accounts, and honestly, I've never used one. So I'm going to shift whatever charting I need to do over to TradingView so that we can do it side by side, because TradingView, I believe one of their plans is free, where TrendSpider's plan that I'm on is like really expensive. I think it's over $100 a month. Yeah. So I completely agree with you. So I will switch over to TradingView maybe by this afternoon. I'll have that all set up. Old English Sage, good afternoon to you. What's up, Nikolai? This music is ridiculous. JG, you're ridiculous. You're ridiculous, dude. Random guy. Question. I understand your position size and calculation. Can you explain how you applied the result of the calculation to a trade? Let's go. Let's go. Okay. So let me pull up that spreadsheet real quick. Inside the Discord, we have a link to an area called the VIP Investors Toolkit. And where's it at? One of these is the portfolio sizing link over here. There it is, portfolio sizing spreadsheet. If you click that link, it's going to make you create a copy, but then come in here. And this market posture is automatic, but you do need to fill. So it's going to look at what the market's doing and fill that in. What you do need to do is fill in your account balance. Let's say you've got $250,000, and you got to figure out what percent risk you're comfortable with. I generally say 5% is a good place. I like 7% because I know my numbers. And I'm not stressed about that at all. Now, this is portfolio risk. This is not portfolio size. Let me explain the difference real quick. Actually, I'll explain the difference right here. I'll explain the difference right here in math. Insert one column left. And then we'll copy this over, but then we're going to do this. And we're going to say, actually, I might save this portfolio size. I might save it this way. That way we've got it. Because I always have to add this and put it in. Okay, so portfolio size. So we're going to take a share size times share price. And we're going to divide that by your account balance. Now, wait just a cotton picking minute here, Chris. Wait just 1 minute here. You're telling me that I can trade with 138% of my account in one trade? Your mind's about to get blown. So if I'm risking 7%, let me make this bigger. So if I'm risking 7%, the formula that calculates your share size is thus. Thus, fancy word of the day. It's thus. Take your account balance. In fact, let me do it like this so we can be on the same page. 100. And then 5% risk per trade. 100,000 account balance multiplied by your risk percent you have decided you're comfortable with. Then dividing that by 2 times the ATR. What is the ATR? ATR is the average true range of a stock. The larger this is, the more volatility that stock has. The smaller it is, the less volatility that stock has. And you can see on the SPY, right now it's sitting at an ATR for about 17, versus a few months ago it was at 4.6. So it's practically 4 times higher volatility today than it was a few months ago, which means you need to be trading 4 times smaller than you would just a few months ago. Okay. So that's what we are looking for with the ATRs, finding that volatility. So I like to look at Coke versus Tesla. That's always my go-to, a boring stock and an exciting stock. When you apply that formula here, it comes up with your share size. And then for me, I like to trade options, so I divide that by 80 to get an approximate option size. Now, the total risk here is 1.25%. That's a lot less than the 5% that I'm talking about here. And that's by design. That's by design. Risk meaning how much risk to my portfolio am I willing to take? If things go the opposite direction, where will I want to get out? So I want to get out at half an ATR down. So for Coke, that'd be getting in at approximately 72.52 and getting out around 71.61. The difference in 72.52 minus 71.61 times this share size that we just calculated right here is $1,250. By design, less than the 5%. Now, the other thing that blows people's minds is how much portfolio size am I putting on? You could basically put in 100% of your account. Now, I'm not telling you to do this. You could do this. You could put in 100% of your account into Coke and say, okay, if it goes from 72.52 to 71.61, I'm out. How much damage is that going to do to my portfolio? $1,200. That's not bad at all. I could buy $100,000 worth of shares and still have $1,250 of risk. This should start blowing your mind any moment. So the question was, can you please explain how you apply the result of the calculation to a trade? So you're going to have this number of shares pop out if you do shares, or this number of option contracts if you divide by the delta that you normally go with. And for me, that is way more cost effective, right? So let's look at Coke real quick. The market just opened, so things might get crazy. But let's look at Coke real quick. So my option size is 17. So let's go to, we're already on Coke. I want to go to the monthly, which I believe is this one here. Expirations, regular expirations. Yeah, I'm looking at the monthly on Coke. Now, I usually go to the 80 delta on calls, so that's about right here. Now, because it doesn't have much open interest, I only look at open interest. I don't look at volume. If it doesn't have much open interest, I would go to the one that does. The reason these don't have much open interest is more than likely these are brand new strikes here in the last couple days. So that's why they don't have much open interest where others do. So I would be looking at the 83 delta, which is the 6750 calls. When I look at the 6750 calls, I can then take and buy 17 of those with this account information right here, right? So if I bought 17 of those, there you go, just like that. And then that's how you send it. Now, if I bought 17 of those and my price was $5.47, if I bought 17 of those, 17 times the price of the call, which is $5.47, I'm only spending $9,200. Let's multiply that by 100. I'm spending $9,300. So for $9,300, I'm getting nearly, in this case, 99% of $100,000 worth of stock. Now, this is where things get really tricky. This is where people's minds get absolutely monkey hammered. They're like, what in the monkey donkey are you talking about, Chris? I can control 100 shares per contract. I bought 17 contracts. Each one of those contracts cost me $5.47. So I'm controlling 17 times 100. 1,700 shares for only $9,300. Whereas if you're just buying the stock outright, it's going to cost you about $99,000. Isn't that cool? This is why I call it, it's a leveraged investment. This is not a YOLO play. This is not, I'm going to buy out of the money calls and hope for the best. This is a leveraged investment. Now, that leveraged investment does have some time decay to it. It does have some theta decay. Extrinsic value on this is 48 cents. That 48 cents will go to zero. All right, so let's just do this real quick. So if we look right here, let's round it to 50 cents. So 50 cents divided by the price of the option that I'm buying, 535, means only 9% of this will decay. However, if you buy the out of the money calls, let's say you bought the 74 strike, it has no intrinsic value. It's 100% extrinsic value, and 100% of that will decay. 100% of that will decay. Let me show you what I mean. So if you buy an out of the money or at the money call, 100% of its value will decay over time. Whereas mine, which in this case was only 9%, only 9% of my option value will decay over time. There's a huge difference in an out of the money call versus a deep in the money call. And that's why I trade them the way that I do. Now, I didn't come up with this. Larry Hite came up with this. He was the first $1 billion hedge fund manager, and he's the one who taught this to me. And it's so freaking cool. So I just went through a whole bunch of stuff right there. Hello from the UK. When's Outlier University opening? I will have the application in our Discord today. So in our Discord today, look for the application. It's not going to be first come, first serve. We're basically going to create a list. We're going to figure out, I mean, there's going to be a few things, right? Number one is that you have to show up on time in person, right? And so it's going to be like a Zoom call. I'm going to expect you to have your camera on because I want you to ask questions. I want you to make the content as great as it possibly can be, because we're going to take this content and we're going to teach everybody we possibly can with this. It's going to be free for you to attend. It's going to be free for you to learn. And it's going to be free for everybody else to watch. And basically, I was telling Mark and Mahesh that we need to, hang on. We need to treat this as if we have restarted the Turtle Traders. So the Turtle Traders was an experiment that they did in the early 1980s by Richard Dennis. His colleague, William Eckhart, said, traders are born. You can't teach trading. And Richard Dennis is like, dude, that's so freaking stupid. I can teach anybody to trade. So he got people from all walks of life who had never traded before to people who have been trading for 20 years. And he put them in a group, gave them 2 weeks of instruction. That's it, 2 weeks. And then he gave them $1 million each to go trade. And he made $150 million from doing so. So basically, anybody can learn to trade. So what I asked Mark and Mahesh to do is we need to make Outlier University like the new version of Turtle Traders, because I believe we can teach 1 million people to trade. I believe we can teach 1 million people to trade successfully. I'll put it that way. 90% of traders blow up 90% of their accounts in the first 90 days of trading, including me. I did it too. But the thing is that I didn't stop. Right? I didn't give up. I decided I was going to make this happen, and so I sought out the best traders in the world. Which platform do we use to trade? So we have a partnership with Tradier. That's this platform that you see right here. I previously used Tastyworks. I previously used E-Trade. I know several people use Thinkorswim or Robinhood or Interactive Brokers. Doesn't matter, right? They're all going to get you basically the same place. The experience is going to be 95% the same amongst all of them. So don't worry so much about that. D, hey, this is Officer Quimby. Hey, D, why do deep in the money calls for SPY have such low delta? For example, I'm looking at the, okay, thank you for giving that example. Let's go to look at that real quick. You're looking at the SPY. And you're looking, there it goes, May 30th. So let me change expirations real quick. So all of them. May 30th. 537. Strike price. And the delta is only 61. Okay, so I see the same thing too. So the market makers decide basically what the delta is going to be associated with these. I can't tell you exactly why it's that, but it has to do with how far away it is from at the money. At the money means where does it convert from in the money to out of the money? At the money means where does it go from having absolutely no extrinsic value to having extrinsic value? We can see that change over right here. Intrinsic value, I should say, not extrinsic. They all have extrinsic. Where does it go from having no intrinsic to having intrinsic? And for SPY, because it's a $500 stock, you're looking $11 away to get to the 61 delta. If we look at Tesla, it's a $265 stock, and to get to the 80 delta, we got to go $40 away. So it's half the price, but we have to go 4 times as far. Right. That has to do with the volatility of the stock itself. Has to go to the volatility of the stock itself. You could look at something like Coke, which has low volatility, and your 60 delta is $3 away. Right. So it really has to do with how much volatility there is with that particular financial instrument, right? ETF stock. I'm going to always say stock. I know somebody in the comments is going to be, it's not a stock, it's an ETF. Nah, I don't care. We just call them all stocks. It makes it easier. This music is a load of bull market. Is this Q&A Friday? Yeah, let's go. Get a position size investment capital. Where's the sweet spot? That's up to you. That's up to you, right? There is a formula called the Kelly criterion. I actually did, and so Mark Gariski is our co-founder. He's the smartest man I know. He and I actually went back and forth for a couple of weeks about what position size would be optimal for me, and we both decided around 7%, because that allows me to get the most number of trades on while not being over leveraged into any one of them. But my Kelly criterion was something stupid. It was like 25%, something like crazy. That's the quote ideal position size. But really, it really comes down to your own risk tolerance. How much risk are you willing to take versus how much profit potential there is, right? You want to trade big enough where when you win, it actually makes a difference. But you want to trade small enough where when you lose, it doesn't make a difference. I know that that's a balance you gotta figure out. Ashley, Chris, is market breadth driven by 10, 20, 50 since the SPY is now in buy signal? So market breadth inside of Outlier is driven by how many stocks are on the bull list today. How many stocks did we get a buy signal versus how many stocks we have as sell signal. So this huge move up right here is that representation of 523 new stocks coming over today. Let's see. What is the answer to the universe and everything? I believe that's 42. I believe that's 42. Shane had a question. Chris, when is your book coming out? So I actually wrote a book a few years ago. I actually put out a first and second edition. Hang on. I'll show you both. So, first edition, this one, The Secret Investing Book. I thought I'd be clever with the name, The Secret Investing Book. And then second edition's cover is way more better, right? But second edition actually has Outlier, whereas the first edition was my previous company that I sold to Outlier, 10minutestocktrader.com. Now, I will tell you, the information in these, I do not trade on anymore. I really don't. So if you went on Amazon and you bought them, I'm going to tell you right now, they're outdated. They're outdated. The plan is for us to create Outlier University. And in the process of creating Outlier University, taking those lessons and then putting them into a book, Mahesh really wants me to keep it under 100 pages because he feels like that's going to be the most accessible way for most people. And then instead of saying, go buy my 5 favorite trading books, I can say, go buy this book. We're going to sell it at absolute cost, whatever it is on Amazon. It's like $4 or whatever to print it. We're going to put it at $4.01, right? Just so it works. Not only that, but we're going to make it available for free in our Discord. We'll have it on Kindle for whatever the lowest price is on Kindle. The objective here is not to make money on the books. We don't want to make money on the books. We want to make it accessible for you. So Outlier University will become a book, a textbook, if you want to put it that way. But instead of it being like a million pages, like this fifth edition of Trend Following, Mahesh really wants me to keep it to 100 pages. So this year, but first is Outlier University. Priority is Outlier University, for sure. Graham says, I'll take an autograph book. For sure. I'll autograph you guys some books. In fact, I think that'd be really cool. I actually used to do that. So back in the day, my original company was 10minutestocktrader.com. I started that in 2017. And when somebody signed up for 10minutestocktrader.com, I actually, I had an assembly line of autographing that I would do. Whenever people would sign up, I would, I'd have like a whole row of books on the table and I'd just go from one to one to one to one, say, hey, I'm so excited that you're here, love Chris. And I'd send books out like that. We could definitely do that again for Outlier University. I think we should be doing that. We'll see. I don't know. I like to take care of you guys. Amazon has it half priced. Yeah, exactly. What's up, Stocky Locky? Mark Andre says, great video, by the way, yesterday. Didn't finish it yet, but the book looks great so far. So he's talking about the video we did about the turtle traders. It's fantastic. Can you go over buy to open versus buy to close? For sure. Let's do that. In fact, let's do this. So when we look at an option, or when we look, I'm just going to focus on options. That's what I trade. If we look at options, when you go buy a call, you're going to see it say buy to open, meaning I want to buy the call. I want to own the call. But you're also going to see buy to close, or sell to open and sell to close, right? It's just the opposite of what you're talking about here. So if I buy to open, I'll have to sell to close that position. Now, if I sell to open the position, meaning I'm selling the call, I then have to buy to close. So your question was buy to open versus buy to close. If you previously had a short on, let's say, for example, you decide to short the market here. And so you have short shares, meaning you have sold to open the shares. This is getting really, really complicated. So I understand if it doesn't make a lot of sense right now. Let's say if you sold to open shares, you have to buy to close to get those shares off your books, right? To go flat, to get out of the trade, you have to buy to close, because you sold to open, you have to buy to close. Yes, you did call the bottom. You rock, and that's why we're all here. Well, you rock, Rick. Hey, Richard. Sorry, not Rick. Richard. Richard, do me a favor. Tell everybody you know. Tell everybody you know. Shane, Chris, maybe a short question for a long answer. Knowing your skill set and value on the altruism, I'm super grateful. Dude, you're super welcome. first off, there are people who love to play golf, and so they go play golf all day. There are people who love to go bowling, so they go bowling all day, right? There's people who love pistol shooting, like our friend Dave in the Discord. He loves pistol shooting. Dude almost was in the Olympics for pistol shooting, right? So he's devoted a lot of time into that. There's a book, I believe it's called Outliers by Malcolm Gladwell, which I'm pretty sure I have on the shelf. Hang on. I know I read it, but it may have just been on Audible. No, I know I have it. Maybe it's over there. Yeah, I don't know where it is. I got too many books in here. But in that book, he talks about how people who are born in different circumstances, like if you were born first in your class, you're going to be the biggest, strongest athlete whenever you get to high school because you're older than, you know, 11 out of the other 12 children, being that you were born in the first month of the school year. And so things like that set you up for success in ways that you wouldn't know otherwise. And that was me. I absolutely love math and I love finance. And the culmination of loving math and loving finance and loving data was that stock trading came really easily to me. All the data, all that kind of stuff came really easily to me. Now, I do struggle with chart patterns. I can't see them. Like when someone draws I call it upside down triangle staircase cheesecake bull flag pennant, I don't see it, but I can see math and I can see the moving averages and I completely understand that. I'm really, really, really good at identifying patterns. Now, all of that to say, I've made lots of money in the stock market. I've also lost lots of money in the stock market. And those losses have helped me figure out the ways to make money, right? It's like Thomas Edison. The old adage is he found 10,000 ways not to make a light bulb. But if you actually think about it, he literally found one way. Okay, this doesn't make a light bulb. Way two, this doesn't make a light bulb. Way three, this doesn't make a light bulb. That was me in trading. Way one, okay, this wasn't profitable. Way two, this wasn't profitable. Way three, this wasn't profitable. And so by doing that, experimenting on myself, I developed an absolute love of the game. So I treat the stock market as a passion for me. I love it so much. And why I say people love golf or pistol shooting or bowling or whatever is because they can do those things day in, day out, all day, every day, and love every moment of it. That's trading to me. That's trading to me. And because that's trading to me, if I didn't have an outlet like this, I would be, I don't know what I would do. But having this outlet and finding people who also have this same shared value is why I can do what I do and love every moment of doing it. And you can probably tell in the way that I talk about the markets that this is my jam, right? This is my number one focus in life because I love it. And that's the way my mentors were too, right? They found something they loved and it happened to be something that made all the money in the world. So I'm just super, super stoked that I can do this with you. Plus, like, it's not about me, it's about you. Anthony, good morning. UK investor here who enjoys your videos. Do you do a monthly subscription to your software? We do. We do have a monthly subscription. We also have a 14-day trial. The monthly pass is like 69 bucks, but the annual pass is $2.99. So what is $2.99 divided by 12? It's stupid cheap. $2.99 divided by 12. $24 a month. So you can get Outlier for $24 a month. And if you can't make $24 a month in returns, I can't help you there. Brian, what's up, dude? Let's go. What's shaking, Coach Land and Pete? Let's see. How long do you sit on a trade that's moving horizontal? So I call that dead money. Mark Minervini also calls it dead money. And that's a great question. That's one of the reasons why we look for the Outlier trend template to show you which direction it's going, right? Because right now, if you think about it, if you bought SPY on April 3rd to today, April 25th, this is dead money. This is dead money here because it went sideways from April 3rd to April 25th. Now, it didn't feel like dead money in the process. It felt really exciting and probably not in a good way, but this would be considered dead money. So what you want to do is you want to find it when the trend is moving up like this and then ride that trend. Now, the way that I look at a trend is you've got, if there's 100% from the absolute bottom to the absolute top, the bottom 10% is the absolute hardest maybe not the absolute hardest, second hardest. The bottom 10% is the absolute second hardest to figure out where the bottom has happened and where it's turning around. The top 10% is the absolute hardest because everybody wants to call the top. Everybody wants to say, you got to get out here because it's about to crash, right? But the bottom is also exceptionally hard. I would put them on equal hardness, honestly. The bottom 10% trying to call the bottom, the top 10% trying to call the top is so hard. So why fight that? Why not just let the trend tell you where the 80% of that move is and then ride the 80% up, ride the 80% down, whatever you're going to do. And that's what the outlier trend template shows you, right? Instead of trying to call every one of these candles as the top, you can wait for this measured move to happen, right? Let's say this is the measured move down, and maybe 10% of it at the top, maybe this 10% right here, you missed out on. But let's say you went short up here when the moving averages crossed, you were able to make 80% of this move down, right? And then if this is the bottom, then you got out with 80% of the move. Pretty cool, right? That's how trend trading is done. You're not trying to catch the top. You're not trying to catch the bottom. You're just trying to catch the meat in between. Imagine it like a sandwich, okay? You've got your bread on top, your bread on bottom, but nobody's here for the bread. Nobody is here for the bread. They're all here for the meat in the middle, right? You got your I'm trying to think of meat. You've got your, oh, hang on, it's Texas. You got your top bun, you got your bottom bun, and then in the middle, you got your chopped beef, right? You got your chopped brisket mixed in with the sauce all together. Maybe a couple pickles, maybe a couple onions, but that's what you're here for, right? And it certainly is not for pulled pork. That stuff is gross. We're all talking about brisket, okay? You want the 80% of the middle, which is all that beautiful, juicy, fatty brisket that just when you eat it, it gets all over your face and it drips under your shirt, and you're like, oh man, now I gotta change my shirt. That's what we're talking about. That's the trend part that you're looking for. What is the difference between a green and orange block? I assume that's an outlier. Let's go look at it real quick. And y'all are going to have to help me find some stocks with those order blocks because not all of them do. I assume this is what you're looking at, Sarah. So in green, I believe it's actually a blue color, would be one that's underneath versus an orange one would be one that's over top, right? So if we look here, this order block was created on AORT. What is this stock? I don't even know what the stock is. Art Vision Healthcare. So order block was created in September of 2024, bounced down, bounced down, bounced down, and only when it crossed up did that order block in. Now, when it crossed through there, it actually made a second order block on the bottom, and you can see it bounced right into it once and then out of it like that. Pretty cool, huh? Pretty cool, huh? But the order blocks right there are support and resistance zones, and in Outlier, we wanted to make it easy for you to see where they ended and where they began, because in other software like TrendSpider, when they disappear or when it gets broken, it just disappears off the chart. You don't see it anymore where it came from. Quentin says, how do you manage your trade if you're not in front of your screen? With position sizing. If I have my position sizing good to go when I first start, I don't have to worry about it, right? It's either going to work or it's not. It's going to be big enough where it feels great when I win, and it's going to be small enough where it doesn't hurt me all that bad when I lose, and I know exactly where I'm going to get out on the chart no matter what. Anthony says, can you explain why cash secured puts and covered calls might be considered bad strategies of us who are new to options? I'm sure I'm not the only one who really wants to understand. Anthony, I got you. So let's talk about a cash secured put. Cash secured put. So a cash secured put is essentially just selling a put, right? When you sell the put, let me find a good example here. Yeah, this is good. Open in new tab so I can make it big, and then I'm gonna draw all over it. So a cash secure put is selling a put. You just have to have cash to do it. So first off, let's say that we're selling a put in Coca-Cola. All right. Let's say we're selling a put in Coca-Cola. And let's say we're selling an out of the money put around the 20 delta. So if I sell an 80 delta put, if I'm selling, I should click that button. If I sell a 20 delta put, I'm going to take in, let's call it 75 cents in credit. So my total max win on this trade would be 75 cents. By the way, selling a cash secure put or doing a covered call are going to look practically the same. So we're just going to use them as one example because it's really just about the same thing. Now, When you sell the put, that means you're short the put, and you're taking in $75 of each one of these. The problems start to arise here because to sell that $75 put, I'm going to have to put up probably 20% margin. So 68 times 100 times 0.2. So I have to put up $1,360 to make my 75. So my margin I have to put up versus how much I could potentially make is 75 divided by 1360. So I could potentially make 5% on the trade. Okay, that sounds all right. I don't mind making 5%. Now, looking at this, it gets even better because let's say the current price right now is here, which is at, where's the current price right now? 71.75. 71.75. But this short strike, the strike we sold, was the 68. So that means, where's my cursor? I can't see my cursor. There it is. That means it can go down from 71.65 down to 68, and you're still going to make that 5%. That's pretty cool. It can go up from 71.75 to 1,000, and you're still going to make that 5%. Oh, maybe that's not so cool. It can go nowhere. It can stay at 71.75, and you're still going to make that 5%. So when you look at this situation, you're like, okay, so I just had to put up $1,300 in capital. Oh, geez Louise, that was terrible. Let me try that again. I had to put up $1,300 in capital for this trade. I can only make 5% total. My absolute max gain was 5.5%. I cannot make more than that. That is my total potential max gain. Now, there's a great chance that I'm going to make it. In fact, the market makers would tell you you have a 78% chance of making that 5% gain, because delta essentially means out of 100%, how much percentage would you assign to this stock being in the money at that point? So right now, let's say it's at 22%. 1 minus 22% equals 78%. So you have a 78% chance of this being out of the money, and you can keep, because you sold, the entirety of the $75 that you did per one lot there. Sounds great on paper. Problem comes when you lose. And you might win 80, you might even win 85% of the time. This happened to me. This is how I know. Like I said, I found out all the ways to not be profitable. This is one of them. If it goes against you, you've got from 68 minus how much you sold it for. So it was 75 cents. So you really have until 67.25 to be profitable. At 67.25, that's your break-even point. When it reaches that break-even point and goes down, you now have the full force of a hurricane coming against you. You now have a full force of a hurricane. So while this one lot sounded great, that's basically 100 shares worth, sounded great right here. As it moves against you, you are losing money hand over fist because Hurricane Donkey Monkey just came to town. Hurricane Monkey Hammer just rolled through. And you're like, well, that can't be that bad, Chris. Bro, if it goes, let's say $10 against you, right? Let's say it goes from 70, what is it right now? Was it 75? 71. Let's say it goes from 71 to 81, right? Now the stock price has moved up to 81. That's good. That's good. Actually, I want it to go the other way. Let's move from 71 to 61. That's what we need to see. Let's move from 71 to 61. At 67.25, you start losing money. Now let's say it goes from 67.25 minus 61, 625 times 100. So you just lost $625, and the very most you could make was 75. So how many trades do I need to get back? How many trades? 625 divided by 75 means I need 8 trades to break even from the one loss. But maybe you're thinking, dude, that's fine. I mean, I don't mind owning Coke at $68. That'd be fine. I would love to own Coke at $68. We recently did a video. This is one that was really useful right here. When Invest with Henry talked about a huge loss that he took on Meta stock because he had that same mentality, which is, oh, you know what? If Meta goes down, I think it was the $600 level. He was selling those cash secured puts, and he was saying, and when it was up around 625, he's like, I would love to own Meta at $600. And then what happens? He loses money hand over fist, and maybe he even takes the shares. And while I say that this is the full force of Hurricane Monkey Hammer coming against you, do you really want to start buying a stock as it's crashing down? Because that's exactly what happened to him, and exactly what could happen if he sold the 68 puts on Coke. As it's crashing down, you're like, I'll just take the shares. That's fine. And down and down and down and down, right? There should never be a time ever, if you are selling cash secured puts, selling puts at all, or selling calls in this case, never be a time where you're like, oh, I'd love to take ownership of the stock because that's gone against me so much. I just can't wait to hold on to this loser even further. No way. No way. If you've done the trade correctly, it should be moving up like this because your trend template told you it was already trending upward. It should be moving up like this, and it should never be assigned. Ever. Never, ever, ever be assigned. So for those people who saying, oh, you know what? I'll find a price where I would love to own it at. Bull crap. You definitely don't want to be owning it as it's crashing through that stock right there. As it's crashing through. Great question, Anthony. Thank you so much. Chris, it seems like 90% of the trades discussion includes sitting in sidelines and cash. Do you ever talk about short trades? I assume like buying puts. Yeah, for sure. It just didn't set up for me. I think I'd put on one or two this year. Just the market breadth and the market trend just didn't line up. And trust me, had it lined up, I would have been all over that. Absolutely. Jameis, when do we consider an overhead order block to be taken out? Does the stock have to close above the price? Yes. There was, I think it was AMD. Yes, it was specifically AMD on this date. Now, the trend template did cross. And I tell you guys this all the time. Trends change, right? And I said, watch for this order block right here. Receipts are on YouTube. That was before the second one was created. And there were people coming through that morning on the morning live stream saying, Chris, look, it's above its order block right there. Now's the time to get in. And I'm like, wait for the close. Wait for the close of the day. And what happened? It got absolutely smashed. It told you ain't gonna happen. And then, boom, right back down into another bearish trend. Now, let's discuss what is an order block. An order block is a large institutional order waiting to be filled, right? These are areas where there have been pivots in the chart. And that means that some institution, maybe more than one, has said, I want to sell my shares when it gets to this price. Or I want to buy shares when it gets to this price. Now, you and our retail accounts cannot overcome this, not unless we have all the traders in the world who come through like on GameStop or AMC in 2021. Collectively, could we do that? Yeah. Individually, never going to happen. So those are incredible areas of support and resistance. How do we add PTL to Outlier ETF? Oh, if you go into Discord in our feature request and just type in, I know Mahesh is planning on onboarding even more stocks in the next couple of weeks. I don't know how many, but there is a new upgrade coming out really soon. We're constantly upgrading Outlier, by the way. So that may be in the upgrade coming up soon. Corey said, will Outlier eventually include all the indicators and views needed like Trading Spider or Trading View? Yeah, I got you. So right now, Outlier's objective is to be a daily swing trading-esque platform, right? There are only daily candles. We do plan on having every indicator out there. We only have a handful right now, but we are adding them all the time. That's very common in a charting platform. Is it starts with some and then it adds more and more and more. And we're doing the same thing. So yes, all the indicators will be coming, but I don't know if we're going down on shorter time frames than daily charts right now. But you should be able to get all the other information you need on free charting, like Trading View, or Thinkorswim, or maybe any other broker charts out there. In fact, I think, even Tradier has charts in here. Now, I'll be very honest with you. I've never used it once. I've never used it once, but they do have it. In Outlier, the colors of the order blocks mean blue and orange. It's just one's above and one's below. That's all I was trying to show you. Donald's accelerating the market cycle for sure. Is related to the fear and greed heat map, or is it related to market breadth? It's really both, right? It's both if you think about it this way, Jay. So Jay's question is the screaming buys or screaming sells? is this really market breadth or is this fear and greed? It's really both, man. Because when people have optimism, belief, thrill, euphoria, that's pushing up more and more stocks. That's getting more and more greedy. And then you reach the top and they have euphoria, complacency, anxiety, denial, panic, which is pushing down stocks, which is pushing down breadth, which is pushing up the fear and down the greed. So, yeah, dude, you got it totally right. So Bank of America says sell into the rally. Who listens? So I don't put any weight at all on what these analysts say, right? These analysts have one job, and it's to make them and their bosses look good, right? They don't care how much money you're going to make. They do not care how much money you could possibly make. All they care about is making sure they don't get fired by looking stupid. So, of course, they're going to say stuff like that. I put zero emphasis on that. Deep thought. I would love to learn anything you can teach about deep in the money calls. Oh, there's so many good questions. So many good questions. Oh my gosh, there are so many good questions. It's so deep. You guys have been going crazy on these questions. Deep in the money long calls. I mentioned earlier, they are a leveraged investment. Let's do a long call. So if we look at it like this, this one's a little bit better. You're going to pay whatever the cost of the option is, but you have unlimited profit potential. Meaning, if the stock is currently at 100 and the stock moves up to 200, you only paid $2 for this call, yet you're able to take advantage of a $100 move in the stock. Pretty cool, right? Pretty cool. And if it goes the other way and it goes against you, then the very most you can lose is what you paid for it. That's just long calls in a nutshell. In a nutshell. There we go. Does market trend indicator update all day long? Market trend. I'm not 100% sure what you mean by market trend indicator. But yeah, maybe that's the green overlays you're talking about. That's updated once a day. Is there a list of stocks that's included? Actually, yeah. If you go over here to the watch list and you look at the list right here, you'll have to click load more a whole bunch of times, but it'll show you the 600 and 1600 that are on buy signals. And then if you go over here and do the same, that'll show you the 700 that have sell signals. And that's your list, dude. That is your list right there. Those are all the stocks that we have included. They're either buys or sells. There's no in-betweens. Is ATR included? Not yet. Not yet. Enter Google a couple days ago. Should I hold or sell? First off, I'm not going to tell you if you should buy or sell or hold. I won't do that. What I'll ask you, without even looking at it, I'm not even going to look at the chart, even though I do see it has a buy signal right there. I'm not even going to look at the chart. What I'm going to tell you is you need to follow your plan, right? You should have decided before you got into the trade where you get in and where you get out. So let's transition and let's start showing you what I would do in this market. Let's transition a little bit. So what I want to start doing is start practicing. So when we get everything lined up on the master key, we know where to go. We know what to do right away. So first, this is my style of trading using Outlier called the golden ticket trading strategy. And we need to listen to what the market's telling us. And we do that by looking at the SPY trend. The 10 over the 20, price over the 50 is where I would start. So we'll go to the SPY, or we could even do it in Outlier. Close several of these tabs real quick, make it a little easier on us. We're going to act like we're putting on a trade, but we will not be putting on a trade. I'm just telling you right now, we're going to like dummy through this together. So we have the 10 under the 20, price under the 50 right now. We can all agree, everybody here can agree that this is still a bearish trend. Now, is it getting more bullish? Yeah, for sure. In fact, what you want to see are, look, I'm going to draw on the chart, a lower low turning into a higher low. Okay, so lower low meaning this is a low, and then this was a low, and then this was a low. But now you're looking for higher lows and higher highs. So if we go here, what we want to see is this current candle closing above the 50 EMA. That's definitely what we want to see. But we want to see it getting higher and higher. So lower lows with higher highs. Think of it like a staircase, right? Your staircase moving up together. That's what you're looking for. We're not to that point just yet. So because we don't have that crossover yet, I wouldn't take any trade. but let's proceed as if we were looking to make trades. Next, we're looking at market breadth. Now, market breadth is measuring how many stocks are on our bull list versus our bear list. Let me go back to here. As you can see, we have 500 new names today that have buy signals versus 50 names that have sell signals. So, of course, market breadth is going to have shot up, which is exactly what we see right here. Exactly what we see. Now, this can max out at 100, and it can min out, if that's the word, at 0, right? But what we're trying to do is find when these crossover points occur. And this happened a few days ago, which is what built into my thesis that we had hit a bottom and we are starting to move up, which is exactly what we're seeing right here. So tell everybody you know, Chris called the bottom, right? Tell everybody you know. That will help so many people. So the next step, we have the market trend is not confirmed, but we're going to assume it is just for example's sake. Market breadth is confirmed. Now we do have a buy signal on the SPY today. Market trend, we're going to assume it's confirmed. Market breadth is confirmed, and then sector breadth. What's really cool now in 3.0 signals over here in the sector breadths is it shows you all of them in one place. I usually have to go to each one of these and then measure, hey, did it cross over? Dude, it's all in one spot right now. And there's no bearish market breadth or sector breadth. So we're good to go. Next, if I had any trades, I'd be looking to close them before adding new trades. I always look to reduce risk every single day. These are my exit signals, but we're not going to talk about exit signals right now. We're going to move on to my screener criteria. Now, this one I want to delete. I want to delete that so hard. That was a rule I made in November, just looking at some data, and I didn't love it. I really didn't. And running through some back tests already, I'm saying that I don't need that anymore. So I'm going to save that. We're going to make a new version of this real quick, but not today. So when I go to my screener, this is what it's going to look like. If I go over here to screener, I actually need to apply my bullish screener. Then I'm going to take off this rule over here, and we're going to save it as a new one, no selection. So then we're going to say save, and I'm going to write this bullish 2 for now. Okay, so I have all the sectors, all the industries, only positive returns on Outlier. What does that mean? If you go into any stock, so we'll go to DTM, and you go to performance summary up here, it'll actually show you how the Outlier signals have performed. So you go over here, and it'll show you on here where it's a close price or when it's trending higher, when the Outlier signal would be active or when it's not active. And then this is the results when you compare the two. Outlier at 89% versus buy and hold at 102. And you're probably thinking, well, Chris, that's not that great, right? That doesn't outperform buy and hold. Hold my beer. This is with us being in the market 54% of the time, meaning 46% of the time we're into something else. So we got 89% returns versus buy and hold at 102, yet we were only in the stock 54% of the time. So that's what that measures when it says right here, capital efficiency. How efficient are these signals, right? Less than 1.0, buy and hold makes sense. Greater than 1.0, outlier signals are in and out and making a better return per day than what the buy and hold is. So I wanted to share that with you real quick. So running the screener, positive only, capital efficiency, I just leave it wide open. I don't focus on that because I focus on other things. But you can. 30-day average volume, greater than 1 million. I want to have as many shares that I can as possible because that means I can get out and not have an issue with liquidity. Current signal, of course, I want it to be on buy signal. Price change, I'm leaving that off now. Market cap, I don't care. I want it all. Price range, I'm a snob, so I want greater than $20. And the reason I do greater than $20 is there's a lot more interest in stocks that are greater than $20 than penny stocks. And I want that liquidity, and that's going to help us get the liquidity. Fear and greed heat map. Basically, I want everything except for 90 and greater, because that's when it's really maxed out on the fear and greed, and I don't want it to be completely maxed out. Next, I want the heat map moving up. Heat map, this is the fear and greed value for every single stock that we cover. I want to see that moving up. I do not want to see that moving down. And then the uptrend indicator, meaning it's already got our 10, 20, 50 crossed. Our 10, 20, 50 is already crossed. So running that, today is the 25th. Oh, today is my grandmother's birthday. God rest her soul. She died in 2009, but her birthday is April 25th. There was only 1, 2, 3, 4, 5, 6. So what I'm trying to get to is 500 buy signals, 6 pass my criteria. Wait, what? What do you mean, Chris? How could only 6 crash your criteria? How could only 6 pass your criteria? If we go over to here on the bullet list and we expand, we can see something. Overlays, a lot of white overlays and red overlays. What does that mean? This means it was not trending higher, but it was either sideways or trending lower. So a lot of these, like this first group right here, only one had a green overlay. The second group, no green overlays. The third group, one with the green overlay. Then, of course, I want to have it more than $20, and then I want lots of liquidity. So in the 30-day average volume, only 258,000. 30-day average volume per day. So that's how you can narrow down from 523 to 6. Yeah, use the screener. Use the screener. Now, looking at this, what I do is I say, okay, if I have these 6 to choose from, I start with the highest backtest and work my way down. Start with the highest backtest and work my way down. This sector heat map, I think we're going to take that off. That is super ugly. Okay, we'll just leave it for now. I'll work it out later. Because the sectors, what I mean by that is this is an experiment that I was trying to work on. But when the stock is getting more greedy, is the sector getting more greedy? You can see here there's a divergence here. You've got the stock getting more greedy where the sector is getting less greedy, right? So that's something I need to work on if I am going to keep that or not. That was another new rule, but we're going to skip over that. So I start with the highest backtest and work my way down. So of these, the highest backtest is NTRA, Natera. So I'm going to look at Natera. I will not trade this because the master key still has us locked out because the SPY trend is bearish. And what's cool is that the master key has a widget right here that within like 1 second, you can see if it's locked or unlocked. And both of them are locked, so both is a no-go. But let's look over this, right? So if we buy Natera today, it has an overhead order block. I'm really not interested in overhead order blocks. So I would not take that trade. Let me see if I have it on here. No, I don't have it right in the way right here, but that would be something I'd be looking for is if the overhead order blocks are on top of us. And that's okay. So I just skip it and I go to the next one. So the next highest backtest was this one here, Parsons Corporation. All right, see, there's an order block that's way up here at like $100 or so, and it's down at 70-ish right now. So if we look at Parsons Corporation, we can see the fear and greed heat map bottomed, got a buy signal today, and is starting to turn back up. The sector is getting less fearful, starting to move towards greed. This is the sector breadth chart down here. You can see it's already getting more greedy as well. So that's everything I want to see. Now I'll go into the options chain. So this is PSN. Notice, how much time have I spent looking at fundamentals? How much time have I taken to look at the company? How much time have I looked into the CEO's background to see how great they are at running companies? I don't care because only price pays, and we're focusing on price. Okay, so looking at this is not one I would take, and I'll show you why. I would start at 21 days to expiration and look for at least 250 plus open interest. There is no 250 plus open interest at all. So I would stop right there, don't even care, and move on to the next one. Oh, I missed TMUS, actually. Let's do TMUS. Wait, was that a today one or a yesterday one? Yeah, it was a today one. I missed it. That was my bad. So I don't see any overhead order blocks. Got a buy signal. The stock is getting more greedy. The sector is getting more greedy. And we see the market breadth is also going up in that sector. That's everything I want to see. So let's go to TMUS. I know this is probably going to be liquid. I've traded TMUS many times. Simplify guy. Exactly. Paying taxes is a good thing. It means you're making money. And Simplify guy, that is one thing that drives me absolutely crazy. Is these people who come through and they try to act so smart. Like, oh yeah, well if I sell, then I have to pay taxes on my gains. Yeah, bro, that means you made money. Don't you want to make money? Well, yeah, but I don't want to pay taxes. Let's trade an IRA. But I don't want to trade an IRA. Then I'd have to take a 10% penalty, and then I have to pay taxes. Then pay taxes. But I don't want to pay taxes. Tough shit. That's how the game is played. Tough monkey donkeys. If you want to make money in the market, you're going to have to pay taxes. Sorry, just how it goes. So, looking at this, I see open interest here, here, and here greater than 250. And then this one right here is around the 80 delta. Now, I always go to the 80 delta because it's always around the 80 delta that I'm looking for. But let's see why. I'm starting at 21 days to expiration. May 16th gets me right there. But I do want regular expirations. Hang on. There we go. May 16th, exactly 21 days. Cool. All right. Now, I might go a little bit earlier. I might go a little bit later. It's all really dependent at this point on liquidity. And we go here. Then we say, I want 250 plus open interest, but it has to have less than 50-cent bid-ask spread. Bid-ask spread being, if I'm going to buy it today and then I have to sell it back tomorrow, how much do I have to give up? I don't want to give up much at all. I want it to be 50 cents or less. So if I look right here, that's right around the 80 delta, 410 open interest, but it's $1.20, $1.10 on my bid-ask spread. So I wouldn't take that, right? Why would I not take that? Because if I have to pay 1945 and then I have to sell it back for 1835, that means I've lost $1.10. And $1.10 on 1945 means I lose 5% just in the buying and selling of the option. Bro, no thank you. Just between the buying and selling of the option, I'm going to lose 5%. No thanks. I'll look for the next trade. And this is what you got to do, right? Does it take time? Yeah. Is it worth it? Absolutely. Let's go to the next one. That would be Geo Group REIT. Oh, great point, right? If it's going down after earnings, another reason why waiting till the end of the day will help you out versus right at the beginning of the day. Okay, Geo Group REIT. No overhead order blocks that I see. Getting more greedy. Got a bullish crossover here. So let's see if we have options for it. Oh, we do. Check it out. Lots of liquidity here. So looking at this one, actually, this one might be good. The 80 delta, but it has 220 open interest. I can work with that, but it's 70 cents wide, so I don't love that. I'll fudge a little on the numbers here and there, but not on both. But if I go to like the 75 delta, it's 40 cents wide, 30 cents wide, plenty of liquidity. I'm good for that. Now, what's my extrinsic value? Because I want to pay 20% or less extrinsic value. By the way, I know most of the time I talk shit about other people's videos. This is what I would do. And this is my style of trading. And it's boring as hell, which is why I made 2,000 videos on YouTube before it decided to push me out there. But let's go back to this. 111 over 470 is how much? 23%. I can live with that. So this would be one I would take right there. Geo Group, 26 and a half calls. Now, of course, you need to know how many. You can buy one or you can buy 1,000. How many do we buy? You go to your position size, spreadsheet, you type Geo. And it looks like, oh, my, why didn't that work? Yeah. Oh, that is not the same formula. There we go. We'll work on that later. So I can put on a 38% portfolio size, yet risking only 5% of my account, which would be how many options? 16. So then I come through here and I'd say, okay, give me 16. And then go. That's what I would do. So we covered a lot today. I love these Ask Me Anything kind of days because we covered all kinds of different topics. And then I showed you what I would do to put on a trade. Now, in the afternoons, the afternoon live streams have been for years since like 2018, probably, me trading in the afternoons. So if you want to see me put on live trades, be sure to come for the afternoons, or we send alerts out in our Discord. But of course, not everything is going to work out. While I do love the game so much, there's no way that I'm going to get a 100% win rate. And that is why it's so important to position size correctly and know where you're going to get out. But every opportunity, you could make a great killing. Every opportunity that comes through, you can make a great killing. So be sure to come to this afternoon's live stream. And if you're ready to save time, make money, and start winning with less risk, go ahead and click on one of these videos that YouTube is recommending right now. And I'll talk to you soon.